All right, let's take a look at the market. So Tuesday morning here in Europe, the S&P yesterday on Monday closed lower, nothing catastrophic. And to be honest, all of the indices, maybe except the Dow Jones, remain technically bullish for the very short term. So here we've just got a bit of a retest of prior resistance acting as support for now, or anyway. I mean, just to recap, I'm fundamentally very bearish markets. I don't see why we're this high up, especially when you look at the Dow and other markets like the DAX. Absolutely absurd. But anyway, it is what it is. You've got to respect the tape. So here we're testing prior resistance acting as support for now. If we do go low, I do expect us to test this ascending line for the S&P. NASDAQ, we're actually a little higher. We haven't even tested the support yet to see if it acts as support anyway. So NASDAQ even stronger than the S&P. We have actually had a bit of a tech leading rally in the markets last few days, maybe even weeks. So that kind of makes sense. The Dow Jones, which was actually outperforming the market, has been underperforming recently, hasn't cracked this descending line. So I'm not going to say it's technically bullish yet. It's ready to crack it if it gets support from the other markets, but for now, if it doesn't crack it or doesn't go up, it will go down, and then it will start to look bearish quite quickly and could lead the rest of the indices lower. If we start to crack this sort of level here, 32,500. So the Dow Jones, has to really take out 34,000 and close above it, above this descending line to test the horizontal and move higher. But moving higher above this is really absurd. It would start to look like the DAX, the German DAX, which I just do not understand how this can be this high, even if inflation is being priced in here, everything, stocks included, go up with inflation. But other than that, there's no reason for the DAX to be this high. So, and likewise, the Dow, hitting its head here on the descending line. Let's see if it cracks it. We do have Powell speaking today. That will obviously move markets, but I don't, when the Fed moved the market higher on Wednesday, I didn't get to do a video then, but I just couldn't believe that move. And lo and behold, the next 2 days, we reversed the whole thing. And then markets start to go, start to look slightly bearish. So who knows what can happen. Russell 2000, a bit like the NASDAQ, still hasn't tested the breakout. So bullish for sure, kind of in the middle of no man's land. So not yet testing this horizontal, not yet testing this one. Let's see. Those are the two levels, on the way up and on the way down. So I would say the S&P, the NASDAQ, and the Russell are short-term technically bullish. You can see that. The Dow Jones, less so. So let's just see what happens. You don't have to chase anything here. The VIX, here's the descending line, is testing it. I really do feel like, even though it's a broken indicator, I don't trust it at all. I just have a feeling we're going to start to move a little higher. Breaking out this descending could lead to the beginning of a move into the mid-20s, let's say. But what's more important, I think, what used to lead the markets lower when we really started to crash were the interest rates and the dollar, and we started to have some moves there. Let's look at interest rates. Look at the 1 year, and I was saying this, watch out, it takes 1 or 2 days, and we're up here testing the ceiling, and that's what we've done. The 1 year, we had this huge move on Friday. That was kind of astronomical. We never had a close this higher. And then straight away yesterday, we cracked above this 4.85, if you want to call it, resistance. And today, I mean, let's see. But we've never really had this kind of a move where we've closed above it and now we're trading above it. So watch out. This is kind of new stuff here, new territory. Yields going up usually means markets down. So I don't really care how bullish everything looks. When the yields are going up, I mean, that's kind of what sent the markets down. I don't know if it's the dog wagging the tail, what the tail is in this case, but yields up should terrify markets. The 2 year, which is probably the most important one, this is the one the Fed needs to match. I said this, watch out. We've got a massive strong candle. If we can test this descending and even close above it, we're going to be testing this horizontal. And yesterday we did it basically in one go. We don't even know if it acted as resistance. We just screamed higher. We basically tested this horizontal line, 4.5. We were just below it at 4.495. So, we've tested 4.5, closed above the descending, and here we are we're gonna basically be trading sideways I don't expect us to drift much lower, but I think we're going to crack the horizontal line. That's the 2 year. For me, the 2 year and the 10 year, but maybe the 2 year is the most important one. So this is huge, and the market hasn't reacted too much to it, but it was a down day. The markets have gone down as yields go up. So what if we start testing the old highs? Don't you think markets will start maybe venturing much lower? Look at the 5 year, same thing. Closed above the descending. Now we're sideways. Let's see if we test the next horizontal. I think these technical lines have really proven their value here. 10 year. Okay, we haven't breached this descending line, and the 10 year is very important. Once the 10 year starts to go up, all of these other sectors that base their yields on the 10 year, on the government bonds. I mean, that really impacts the economy. When you've got mortgages, car loans, just student loans, everything basically off the 10 year. Once the 10 year goes up, the real economy is getting affected. And therefore the markets should take note of that and move lower. So if we get any continuation in 10 year, watch out. The 30 year, same sort of pattern. It's not as much as the 10, just as the 10 isn't as much as the 5. The lower, the further out you go, the sort of slower the move up, but still, if the yields start to go up, you can expect a test of this ascending and a move higher. So, basically watch out with the yields. If yields go up, these markets can crash quickly. Look at the EU yields. I made this case too. I said, there's no one watching this, just off a small bounce here. Look at this. Once we clear this, which we're doing today already, I mean, we're there very quickly. This takes 1 or 2 days. This is within 1 week. I move all the way to test the highs. Then what? You've got, the perfect looking chart moving higher in yields. I don't expect the DAX, the the European markets to hold up all the way up where they are. So they will drag US markets down, and they'll also help US yields go up. So we've got the old pattern of yields going up and markets going down. The markets haven't gone down yet, but I think yields will go up, and then, as bonds go down, the market will go down. That's what I expect. And you've even got the the EU 10 year is good enough as a general barometer for European yields. The French yields, you can see it like this. The German yields is basically the European 10 year. The Italian yields just 1 day behind. The British, and several days behind, they started to perk up too, and they've been the slowest one. So it's across the board. Yields are going up. Let's look at the dollar. The dollar, look at this fake out and reversal, bam, massive. And I said, watch this 103.5. We basically tested it yesterday, closed above it, and then today we're going to be testing this descending line. In fact, we already might start testing it soon today. Now, today we've got some news. Let's see, we could touch it, close red, and then reverse, and then we're trading in this very tight wedge here. But I think the dollar is looking for it. And here I've got my old notes. Test higher, test the horizontal line. When we close above this descending, we'll test the horizontal. And you can see how it looks very, very similar to yields. So I think the dollar going up. Just look at the US dollar, Japanese yen. Look at that. Broke out of this, sideways up. Euro, US dollar, not showing much strength yet. Yeah. So, just to summarize, I think the yields in the dollar will go up further, and that will send the market lower, quite simply. Let's look at commodities. And I'm not just talking about US markets, I'm talking about European markets and even global markets. I'm going to talk, let's look at copper, sorry, I'll start with copper. So copper, I did think was a bit overextended. I expected a test of this prior resistance to act as support. You can kind of say we tested it yesterday. We tested 4, so that makes sense. Bounced off 4, closed above it. I don't know if it's going to try and bounce from here. I do kind of expect it to go lower, though. I don't think this is enough of a test. So if we get yields going up, dollar going up, markets going down, I expect copper to keep going down. So I think copper can actually go lower. But yeah, this is perfect sort of technical chart pattern, testing support. Natural gas, I mean, every time it looks like it's going to curl and go back up, it's gone back lower. I really do think 2.5 is kind of the low. I've said it for a while. I said You know, I thought 4 looked good, 3.5 looked good. And then I said, look, don't touch it if it goes much lower. It could test 2.5. And now we've tested 2.5. I just feel like it's kind of time to go up, regardless of what happens to the market. I think natural gas has its own sort of supply demand reason to buy it down here, let's say. So for me, natural gas is another buy here. But technically hasn't broken out of this descending, so you can't say it's more likely to go up now. Oil, yeah, bouncing off this horizontal. It's really near its absolute lows. I think oil also has its own supply demand side that justifies buying down here. I think it could go lower here into the 60s, mid 60s, but what a ferocious buy would be there. So people are probably buying before. I think you'll get a lot of buying in the low 70s. So I think it's a buy down here. It's quite simply, but if markets move lower, if the dollar moves high, you could maybe get it a little lower, but geopolitical factors, supply demand of oil kind of justifies a buy in this low range. Gold and silver though. Yeah, these trend lines really played perfectly. So we had this flush down here, and I mean, I even made a video, I believe, on the day, was it Friday? And I said, look, we've closed basically at the trend line. So I expect a bit of a bounce, a sideways move, maybe a move lower. It depends on other factors like if yields keep going up, if the dollar keeps going up, which I think they will. So yes, look, we're bouncing off this channel that it touched perfectly. Now we're testing basically 1880, which is, it used to be resistance over here. We screamed above it. I think 1880 will act as a bit of a ceiling. So I think we'll sort of trade sideways and then actually go lower. So, I mean, I don't know if you'll be able to see this, but, sort of trade whatever sideways is, sideways-ish, hit 1880 a little bit, basically trade low. I don't expect us to maybe hit 1900 and then that'll act as a resistance. But I think the dollar will go higher. I think yields will go higher, and I think gold will move lower. It's had a crazy move up. If we're starting to move lower with gold, you may see a bit more follow through because it's had a crazy move. So it's time to digest and go lower for a bit longer. I think not just a small 2 or 3 day drop and then back up. So yeah, that's what I expect. Go lower. Silver. Yeah, I've already drawn my annotations here. So yeah, it tested this horizontal line. So I think that was also technically quite accurate. And yeah, I think it would just do what I've already drawn. So sideways up a little bit as gold tests 1880, maybe a bit higher, and then comes back down. So I think I'll leave this as it is. So yeah, gold and silver just sideways up, very, very short term, but a bit lower. So I'm waiting actually. If I look at the miners, I really wanted to buy. Here I'm looking at GDX. I wanted to buy yesterday because there was some stocks that have come down quite a bit that I've sold here. I sold this area aggressively, and I sold this area too, which is where we're at. So I kind of wanted to rebuy, but I just feel like if I'm a little bit more patient, I could get it down here, which is probably another 5% drop or something, which is quite nice. Yeah, 4-5% drop, which is nice. So when you buy a mine at 5% lower, it's kind of one level lower, in my opinion. I think every level it's like 5 or 10% away. So that would be nice. Like I sold some Newmont the other day at this crazy price. There was a bit of a glitch at the open, 57.08. I sold Newmont, and then it closed much lower. And then yesterday there was some news of a merger potential, acquiring I forgot the name, Newcrest or something, some Australian mine, and then it's 5% lower. So I can get Newmont much lower than where I was luckily able to sell it. So I feel like buying back quickly now before I lose that opportunity. But I do feel like with a bit more time, you could get the miners lower. But yeah, if gold and silver bounce a little bit, maybe the markets will bounce too, right? They're testing a bit of support. If you remember the S&P, you could have a small bounce in the GDX GDXJ with gold in the markets moving. But then I do think that dollar move up, yields move down will send us lower one level. So I'm actually going to try and be patient and resist my trigger happy intentions and see if I can get the miners lower. So this is me being a bit greedy on the downside. GDXJ, same sort of thing. It's actually, you can see GXJ is much closer to this ascending support because it's sort of cracked already. I mean, on this Friday. Basically opened at the level and closed much lower. So GDXJ is underperforming GDX, which makes sense. It's always weak on the way down and strong on the way up. I just show you. So, you know, let's see, maybe get some juniors also a bit cheaper. So I'm just going to hold fire on the miners and see if we can get a bit more of a drop in gold and silver after we've sort of tested this zone here, this 1880-ish level. And as long as it acts as resistance, then lower we go, whilst the markets hopefully also go lower. It's all about the dollar and yields, though. I'm watching that more than anything. The 2-year, I'm watching that. The DXY, I'm watching that. The 10-year. So anyway, I'll leave it there for now. That's my quick update. I'm looking forward to making daily videos again now that my girlfriend's family has left. So anyway, that's my pre-market update. Hope it's useful.